This tutorial is a project of nonprofitaccountingbasics.org, a free resource developed by the Greater Washington Society of CPAs Educational Foundation. Our goal is to encourage accuracy and accountability to help smaller nonprofits successfully manage and sustain their organizations.
Good afternoon. My name is Christine Colburn, and today we'll be discussing worker classification, that is, the difference between an independent contractor and an employee. So there's some common law rules that have been established by the IRS that help the employer determine whether or not an employee is 1099 type employee or contractor or a regular person that they employ and take taxes out on. So the three categories are behavioral control, financial control, and the type of relationship that the employer has to the worker. So further help can be found on this whole topic by going through the SS8 form, which is available at the IRS site. I've put together a table to make this a little more useful than some of the information you might find at the IRS site. And basically it outlines for you in the first column behaviors associated with an employee, and second column those associated with somebody that's more likely to be classified as a contractor or independent. So for tax reporting, you're always going to put your employee's wages on the W-2. However, for the contractors that you work with, those wages will go on a 1099 for all payments over $600 in any given year. Under behavioral controls, this is where an employee really looks different from a contractor. So the employee will need training by the employer, and the contractor generally will not. They've been assigned to do a specific task or job that they know they're like the expert on that particular job. And also under behavior controls would be your schedule. So an employee will have a set schedule, whether it's a 9-to-5 job or a part-time job, but the hours are controlled by the employer. However, with a contractor, they set their own schedule. So they should be able to come in and perform the work or do it remotely according to their terms. Now, under financial controls, here are a few cases or examples that you want to look at. The expenses, business expenses are generally reimbursed by an employer when the employee is concerned, somebody working for you. However, for a contractor, business expenses are generally absorbed or built into the contract price. And again, in financial information, the employee is paid for the hours they work or their salary, whereas a contractor is paid for a job. And sometimes that involves hours, but can also include many other things. With financial controls, an employee cannot work for another firm, and a contractor can. And that's another big dividing point, is that a contractor, if they're working for a particular firm and sitting at a desk and coming in 9 to 5 every day and calling themselves a contractor, they're probably not, because their availability to the outside public, to other clients, is severely limited. Also with financial controls, you're going to see that employees generally come in and all the assets they need to do the job are provided for by the employer, whether it's their computer, their phone, everything. But with a contractor, you're going to have mostly almost exactly opposite. They're going to supply their own tools. They'll bring their own phone, their own computers, and all the other resources necessary to do that particular job. And the final area where you distinguish employees from contractors is the type of relationship. So most employees have a handshake or maybe an employment agreement, an offer letter, whereas it's much more complex for a contractor. Usually it's a written contract spelling out what the contractor does and specific deliverables. So it's much more formalized, and it doesn't state anything about benefits or the other things we mentioned above. The benefits for the employee are covered by the employer, and this is probably the biggest reason why people get misclassified, is because employers do not want to have to pay a lot of benefits. And if they categorize somebody as an independent contractor, they're on their own. They're going to provide their own benefits. And finally, the Employer does all the tax withholding for the employee situation, and not only withholds those taxes, but deposits them for the employee. Whereas the contractor, again, simplifies it for the employer. They will do their own tax filing and tax depositing. So this chart is good to refer to because it saves you lots of looking up of many pages at the IRS website. Now, there are some other ways to classify workers. The states can have their own testing rules, and typically they're known as the ABC rules. Pretty much absence of company control is a broad category, and the business is unusual or away from the company location, and whether or not a person, a worker, has been customarily classified as independent contractor, i.e. working for other places, other firms. So the state ABC rules and the federal common law rules are slightly different, and the state may be more difficult to pass. Depends on who's auditing you. So as we mentioned, this is something that has become a big issue, especially to IRS. There's a lot of taxes that are on the table or out there that they might be able to get their hands on that are not getting reported correctly. So they're giving this whole area a lot of attention ever since 2010. There are huge penalties associated with intentional misclassification, and some of those include you have to pay all of the federal tax for all the length of time that that worker has been with you. Also pay all of the FICA tax, the employee and the employer. And there might be some other state income tax penalties as well. So as I mentioned, there's a national research program where the IRS is looking at a lot of firms where they think they may fall into situations where not all of their workers are properly classified. And for a long time, the only relief available for the employer was Section 530 relief, which is at the IRS website. I won't go into it in detail here, but there's a new program that was started more recently called the Voluntary Classification Settlement Program. And this requires, for you to be eligible, that you have done a consistent treatment of workers as contractors and must have filed 1099s. You cannot be under audit by the IRS, Department of Labor, or any other state agency. If previously audited, you must have complied with all the recommendations. And the big benefit to doing a voluntary classification settlement program would be that the employer would pay only 10% of the employment tax liability that would have been due just for the most recent year, and the employer is not liable for penalty and interest on those amounts. So there's a lot of other information that backs up this presentation, and I will direct you to our resources for the W-2. Most of this is at the IRS site. The 1099 and W-2s would be at the IRS site, as well as the Section 530 relief information. And there's a huge section now on voluntary classification, and the link is here. And furthermore, as we discussed earlier in the presentation, if you want to see what some of the basic steps are that we did in the table, check out the Form SS8. And thank you for your time and attention.